Trillions could flow through cryptos like Stellar XLM, and Zioncoins can benefit, and so can you. But how am I arriving at that? How am I coming to that conclusion? Well, first, before all of that, please like, subscribe. It helps us with the YouTube algorithm, and I can keep delivering more and more content like this to you more frequently. Now, let me just say this. Yes, people, it's all about the fundamentals, but it's also about the technicals, and that's what this video is about today. So we're going to be delving down into what the hell happened with First Republic and look at things on a technical level, and how can we make money in this bear market with technical analysis, fundamental analysis, and dollar cost averaging down. Nathan, over to you.
Okay, that's great. Thanks for that, Nathan. Yes, so here's the stock, First Republic Bank. Now, we know this stock has dropped from $200 all the way down to 17 cents. Let's mark this out here real quick so we can see what's going on here. And if you don't know, we've been following this stock for some time. 17 cents, 15, 16 cents, right? It's dropped that much from $200. That's crazy. And what we're seeing here is, you know, an absolute turnaround. Okay, we don't know how high this stock's going to go, but it doesn't matter. It's about identifying the bottom. What happened in the news? Was there a link between First Republic Bank and the grand scheme of things? So with the government, US government, were they bailing banks out? Was First Republic going to be one of these banks? We know that Zion Bank was one of these banks that are being bailed out. And whether it's JP Morgan that's stepping in, buying up these banks, you know, this has been floating about in the news. Is absolutely relative fundamental facts of the matter clear? You know, are we likely to see the machine go brrr, the Fed machine, right? Are they going to be printing more money? Well, when you have the government, US government saying that they need to raise the debt ceiling, okay, that clearly indicates that a lot more spending needs to happen. Okay, so Fed needs to buy up bonds. That's likely to be the scenario. They may have reserves of maybe 2 trillion, but they're likely to. So these are all fundamental facts, okay? I'm going into this, but I've made videos on this before. Check out my previous videos. In any case, this is a technical analysis, right? So, and at this point, we're talking about a dollar cost averaging. So we found the bottom, okay, of that fundamental news. It's dropped. This looks like it's a somewhat of a reversal, but we can make money out of this, right? Because it's so low, why not jump into this stock if you can get it, okay? So if you bought at around, I don't know, maybe you saw this first happen, you found the bottom, well, you didn't. It started moving up and you decided to get in here at 45 cents, yeah? And then since then, it just started to drop and you thought, oh, wow, there's the next bottom, 26 cents, I'll buy that. And then you found the next bottom. Wow, okay, 16 cents, I'll buy that. Well, that's great, because if you bought those bottoms, you don't even need to spend a lot of money. You could have just spent, $100 or a couple $100 on doing that, right? Just taking that punt, as it were, because it's always going to be a risk. Whatever you do in life is going to be a risk, but we want to take a calculated risk, right? So we've done that, and then essentially, it's done this. It's just gone parabolic and then gone straight up to 81 cents is where it went to before, I think. Let's measure that out. 81 cents. 96 cents, and then it turned around. Okay, so really, if you've bought down here, okay, let's just say 45. Let's say you bought all your bag at 45 cents. All right, up here is where you want to be selling 50% of your bag. Yeah, at that point, if you're selling 50% of your bag at 94 cents and you bought in at 45, you're over 100% in profit there. You sell that bag and then you've got your cash money to reinvest into something else. And at this point here, you've got 50% of that share stock that doesn't have to do anything. It's costed you absolutely nothing. So even if it does go down, who cares? Right? You've just made that money and you're in for free, and it's costed you nothing, right? So wherever this stock goes, it doesn't matter. You could sell this now and take full profits if you wanted to, but you've made a profit. But let's think about where this can potentially go, right? On a high. Has it hit its new Fibonacci? We could say that this is a reset, a restart of this bank share stock, right? So let's look at our tools here. We need to start using these Fibonacci retracement levels, okay? So we'll start from here. It's high point where it retraced, roughly there, okay? And we can start to see that actually, so from the top to the bottom, so it fell all the way down, yeah? We'll have a look into this. So it fell all the way down, okay, to around, we've marked out 26 cents, yeah? Then it climbed back up to about 45 cents, which we discovered earlier, those 3 green bars, right? Three green candles, yeah? And then it's gone all the way up past the 1618, heading towards the 2618, right? So we always use this Fibonacci chart to give us an idea of roughly where this market could be going. We can't rely on it, so this is why we dollar cost average down and take profits at 100%, yeah? And then turn it around if you can, right? But this stock has got potential to go up to $1.62 if it makes a full Fibonacci stretch. And there you should be able to see that retrace at least 100%. So at this point, okay, if we make a full Fibonacci retracement, you may want to, this is not financial advice, okay, you may want to take profits there and let that retrace down to 100%, let's just say. Let's get this on scale. From here, 100%, which takes us down again, okay, to about 25 cents, 26 cents, yeah? 100%, let's just say 100%. 100% is way down there, all right? But as I was saying, ignore that. Take the retrace down to about 50%, or from the previous high. That was it. From the previous high, which is 26 cents, which actually is 74 cents. So 74%, okay, which makes more sense. Is it 74? It's previous high. That's where it's showing it. 45. There we go. 45, which actually is 70%, but we always know it dips a bit lower than that. So I would say about 80%, which is about 29 cents. Yeah. Again, not financial advice. This is just things that could give us a way of trading, an edge over the market, if you like, by having that knowledge. Okay. So we've made money off that. This is absolutely costing us nothing. It's now not considered a gamble because you've got that money for free. It's only a gamble when you start reinvesting money that you haven't got for free, right? So if you don't want to make a gamble, then use the money that you've won, if you like. Use the money that you've made profits on. That money that you've made profits from that stock, use that, okay? You can reinvest it in another stock, or you can then look at how much you've made here, okay? And if it starts to move back up, so we may see this stock moving down to the 50%, yeah, which is the 0.5, okay, which is down here, all right? So from here to here, if it reaches up to there, then it retraces, then it goes back up. So we may see that, but ultimately, if we, that's not a point of interest, get rid of that. If we consider this stock going up to 160, then retracing back down to the 50%, which is actually 50 cents by the looks of it. Let's have a look. So it retraces back to 50 cents. Okay. Then again, you've done it again. Yeah. If you're already in for free, okay, your stocks are free, okay, and you've decided that actually I want to make more profits from this, I'm going to sell at that full Fibonacci retracement level, okay, which is up here at 160. 160, if I can get this to work, at 160, right? And it drops and loses $1, okay? You reinvest at 50 cents, right? Buy it back up twice as much. What you're doing is compounding, and it's costed you absolutely nothing. That is the importance of dollar cost averaging. You're using the Fibonacci retracement levels, using fractals, which you've seen me show you before. We can look at fractals, but this is really technical analysis. It's not something I specialize in. It's something that I know, and I know how to apply, and you should too. Therefore, you should do some research into it, understand what Fibonacci retracement levels are, understand what fractals are, understand what a Wyckoff accumulation zone is, which is what that looked like, a complete Wyckoff accumulation zone, okay? Understand what Elliott waves are. You know, if you can use indicators like RSI, the MACD, those indicators could give you a good indication as to, I can see, I don't know, maybe the 50-day moving average crossing with a 200-day moving average. That is a key indicator where we could see a reversal. The more data points you have to determine as to what's going on technically, the easier it is going to be for you to determine where price is going to go, to reassert yourself, to reassure yourself. So, you know, if you've got 3-4 indicators that's telling you this is what's likely to be happening, then the likeliness of it actually happening is higher. It increases. So you're reaffirming your bet, right? And, you know, you can always get an idea, a clear indication as to what could be happening. One of those indicators is this volume down here, and you can see that volume's very low, but the green bars, the actual green bars themselves down here, okay, these bars coming up here, I'll give you as an idea that, you know what, money's coming in. But also bear in mind that when you see an engulfing bar like that, that means that people are selling off, they're taking profits, right? And we can see that over here, right? We didn't have an engulfing bar over here, but people started selling off quicker. And then you had major sell-off here, which brought this price all the way down to over here, right? So we can only hope really that it's going to start coming in a bit more to push the price back up so we can get more profits from it. But really, I think it's key to understand that this stock, okay, First Republic, had been printing out dividend yields returns of around 400%, 490%, I think was the highest. And that's all taken away. This is on Trading 212, right? We knew that was going to fluctuate. But just imagine, right, that you're in this coin. You're in it for free now, right? You've been in it, okay, for a quarter. Right, and they decide that, oh, right, yeah, price has gone down. We need to get more money coming in. I know, let's just raise the percentage of the dividend so we can get more interest, more people flooding in, and then we'll take it away. Well, look, here's the thing, right? If that works in that case, yeah, that's good for them. We're in it because we see that. We take that risk, right? At least we'll get like, I don't know, 400%, let's just say, dividends. Let's say we did, right? Not that we will, but let's say we did. Who cares anyway, right? Because as soon as that price goes up, which at 17.7 cents, going up to 94 cents, right? We sell at that, we buy at 17, we sell at 94 cents. Guess what? That's 5.3x. That's 5.3x, not 4x, not 4.9, yet 5.3x. So we've made the money. Anyway, sell 50%, we're in for free. Stocks drops again, bam. Rinse and repeat, compounding those games. In any case, Nathan, over to you.
Yeah, that's great, Nathan. And, you know, my little bit of speculation here is if JP Morgan is buying up First Republic, could it be getting into crypto? Because we know that in the United States that Brian Brooks, a comp controller at the time, had passed a regulation that banks could hold crypto. Could First Republic be getting involved in crypto with JPM? Who knows? And if you enjoyed this video and you want to see more about the tools that can be used, like Elliott waves and Fibonacci retracement levels and other tools that you can apply, like the RSI, to determine what's going on with price divergence, let me know in the comments. It's important, because I'll make more videos on technical analysis. Otherwise, we'll just stick to the fundamentals, which is what I prefer anyway. But in any case, I can do a technical analysis for you, but you may want to stick with other technical analysis experts out there, if you want to call them that. But you need to understand technical analysis, and if you want me to do my technical analysis for you, let me know in the comments. In any case, I'm Nathan, aka Nathan of Zion. Smash the Zioncoin up there, like and subscribe, and check out the next video. It's going to be on Bitcoin Cash technical analysis, and also check out Banking on Bitcoin Revisited. Fundamentally, you need to understand. Have a great day. Take care now.